Hello, everybody. Good afternoon. My name is Grace Effiom, and I'm going to be your host for today. And with me, I have a guest speaker who is Mr. Ope Adeoye. Mr. Ope, nice to have you join us on this session, and welcome.
Good afternoon. Thank you very much for having me.
What are the regulators doing regarding fraud? Can you give us more insight as to that from your experience? What the regulators are currently doing with regarding fraud?
Yeah, so I think if many of us have been observing the news, we've been seeing significant recent activity from regulators in recent times. So, for example, the NCC is contemplating approaches to criminalizing the use of your phone number for things other than what you say you got the phone for example. That would require some new laws to be passed, and then they will be enforced. We're also aware, for example, that the CBN is investing real efforts in chasing after unregulated deposits taking fintech, so to speak. Uh, so you see lots of people launch applications, they have some wallet on it. Fraudsters go to get those wallets and then they take a loan into those wallets because they're sort of matched to a new bank. And then to you as a lender, you think these are real customers, these are real accounts, but they're really some random wallet somewhere. The CBN is going to clamp down on all such unregulated fintech activities. These are some of the examples beyond constant follow-up with the community.
Thank you so much. Thank you for that. So should I use the police or EFCC for loan recovery?
Like they say, or people used to say, there's one answer that is always correct. That answer is it depends. So it depends on the scenario. No matter what you say, anyway, that's by the way. No matter what you say, the answer it depends is always correct. So I'll use that it depends for a start. But then it depends on the size of the maybe the loan you're trying to recover, the degree of the problem that you're chasing after. So there are cases where it's better to go through the EFCC if the amounts and the effort required is worth your effort. There are cases where it's better to just use a legal recourse or use the police instead, because you probably already have such processes in place anyway that you can just go. So it will always depend on the magnitude of the fraud that you're facing.
Thank you for that. True that it always depends, and it depends on ABC to get XYZ. So
Yeah.
for our next question, if someone defrauded me, can I report them to his place of work?
Again, it depends. If they defrauded you and you can demonstrate that they used their position in the capacity of that employment to aid that fraud exercise, then definitely you can report them to their people of work. I will also say it's necessary to gather as much evidence as is required to prove that case that they use their position in connection with the fraud that you just experienced.
Okay. Thank you very much for that. And next on our question list is, in your experience, what are some of the most common tactics used by fraudulent borrowers, and how can lenders effectively identify and combat them?
Let me know if you can still hear me.
Yes, please. I
Okay.
can hear you.
I think one of the absolutely most common methods that fraudulent borrowers use, we've touched on it briefly at the beginning of this call, is to use stolen identities to create wallets in some other random thing somewhere, then use that resultant wallet to borrow money. I think that's one of the most common scenarios we've seen in recent times. Um, so if you summarize that, it's just identity theft. That's really what it comes down to. I think that's
True.
about the most common that I can point to in recent times.
Okay. Thank you. How do technological advancements such as AI and machine learning impact fraud detections and prevention in lending?
The most common use case I've seen has been anomaly detection, where uh, there's a sense of what makes a proper pattern of transactions. You have a sense of what is proper, what the right pattern is. As someone who used to always borrow 5K, 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 pay back every 10 days, suddenly starts to borrow 100K. Or somebody borrows 5K, 10K, 15K, 30K. There's a pattern evolving. It's trying to max out and then take your money out at once. You can use analytics and AI to discover this pattern before they become an issue. And then you can run all your loan decisions against the outcome of such analytics systems before even giving it out to the first instance. So if, for example, you discover a pattern of someone trying to max out your system, it's okay. You know you're about to get the next amount, and because the system told you to observe the pattern, you drop it back to what it was the last time. If it's a real fraudster, you realize that there's nothing to gain here. You move on and carry this load for another place.
Mm-hmm. True. Thank you so much for that feedback. So for my next question on my list, I have, what role do regulatory frameworks and compliance measures play in safeguarding lending institutions against fraudulent activities?
Yeah, so I think needless to say, the top regulatory entity on every lending, if I would say, process is the CBN. The CBN has put measures in place to say any loan given out in the country must be recorded against the credit bureau. Whether they are all being recorded is a discussion for another day. But there are regulatory frameworks that says they need to be recorded. The CBN has also created something called the CRMS portal. Every loan is also recorded there. They chase after your credit history is kind of reflected there as well. With these two tools in place, for example, and the CBN can clamp down on every lender and put some pressure on everyone that borrows out money to whether unveil the borrowers, force some data cross-pollination. These two frameworks already create the foundation for all sorts of things that can, including recovery, by the way.
Thank you. Thank you so much for the feedback. How can lenders strike a balance between offering a seamless customer experience and then implementing robust fraud prevention methods? Because you want your money to come back. Nobody wants to give out loans and then the money doesn't come back. But then again, customer experience needs to be seamless, because if you have customers complaining about the waiting time for loan disbursement, and invariably they will leave and probably go to another person that has like a faster disbursement and thereabout. So how can lenders strike a balance between offering a seamless customer experience and implementing a robust fraud prevention measures?
To be honest, it's a constant work to know. There's almost nothing you can do about it. You will have to find that balance. There's a general quote in IT that with increased security, you get reduced customer experience. With increased convenience, you get reduced security. And you will therefore always have to find that balance. That's it. With that out of the way, there are different ways that you can then start to attempt to find this balance, and it's internally dependent on your risk appetite. So if, for example, you are currently on an aggressive drive for growth, without saying it in those words, you need to open your door a little bit more so that more people can come inside. Of those people that are coming inside, bad actors will be there, good actors will be there. Then you have mechanisms for chasing out the bad actors, but they will come in first if you are chasing growth. If you are chasing risk aversion, keeping your NPL pure, etc., etc., then you have to tighten your doors a little bit more. So, in my view, I think you have to constantly, oh, I'm chasing growth now, open the door a little bit more. Okay, close it back, eliminate all the bad guys, do it again, and again. I think that's kind of how you can find the balance.
True. Thank you. Thank you. It's always like a struggle, because you really don't want to lose customers while you're trying to prevent, in the space of trying to ensure that the bad guys do not come in. You can't lose the good guys that are already at your doorstep. So we'll take the next question from our list. What steps can lenders take to educate their staff about fraud prevention and ensuring a culture of vigilance within their organization? Because it's one thing for the lender to have their standard, and it's another thing for their employees to uphold that particular standard. So what steps can these lenders take?
Obviously, continuous training cannot be overemphasized. I will add in that continuous training and say one of the methods that I've found effective is that you bring truly external parties that are from authority agencies to train your staff. There's a way it shocks everybody into seriousness. You get someone from the EFCC to come train your staff around something to do with best practices, etc. There's a way the attention will go up that this is a serious place. So I'll say continuous training. Once in a while, you're using parties from authority agencies to sort of show the seriousness of the matter. It's also good to appoint internally, like some, depending on the size of the organization, you may have internal audits, you may have internal control, but you can also just have internal members that have been appointed to do police work, just continuously training the owners, watching for lapses, etc.
Okay. Thank you. For our next question, how frequently should lenders review and update their fraud prevention policy and procedure to adapt to the evolving trends? We know that the people that are defrauding us, they are evolving. I can remember there's this article I saw on LinkedIn where it said something about it's not the dumb guys that are defrauding you, it is the exceptional people that are defrauding you. So how can lenders review and update their fraud prevention policy so that it can adapt to how they are evolving trends?
Number one is how frequently. I will shorten that answer with a cheeky response with every second. Every second. Now, of course, you cannot update your credit risk policy every second. That's where concepts like automation come in, using automated risk assessment in real time comes in. That's you effectively recalibrating your risk framework on every loan, effectively. So I'll say that comes in. And then periodically, depending on the pace of growth in your organization or your operations, periodically it's good to get an actual risk expert to come into your team and review your current risk models, maybe every quarter, every 6 months, every month. But you should also, it's best for you to have the automated components to do a quick risk decision making per transaction. And that gives you the every second.
Thank you. What roles does customer education play in fraud prevention, and how can lenders empower borrowers to protect themselves against fraud?
I think just like employees, you have to keep at it. You have to keep reminding them, protect your identity, and don't share your information. But then when it comes to customers, there's now a slight balance you need to put in. You also don't want to instigate fear too much. You don't want to, if you're always talking about fraud all the time, people will just become and just abandon it. So for the customer facing side, it's continuous education, just like with your team, but this time with maybe some less frequency, a slight touch of the upside injected in every message, etc. Just so that you don't cause some fear that makes it difficult.
Okay. Okay, I will take my next question. What are some of the key performance indicators that lenders can use to measure the effectiveness of their fraud prevention efforts?
I think the biggest one would be the speed with which you can investigate every reported case. Because this is usually something manual, something operational, it creates this gap between when the event occurs and when you can take remedial action. So the speed with which a case has been identified, it's investigated, it's proven, has to first increase. Again, because it's a manual activity. So that's one KPI. The second one is you need to continuously measure the rate at which you are finding fraudulent activity as against your total pool of transactions. If you are finding more fraudulent activities against your total pool, they start to tell you to make some adjustments to your risk model if you have to. There's that. I think those are the two that come to my mind in the immediate.
All right, thank you very much. And this is my final question for you before I go back to the questions in this section. How does the credit bureau work?
It's a very trick question.
No, it's not. But how does credit bureau work? We have small lenders very familiar with the credit bureau as well. So how
do we take the loan from bank A? Bank A is required to report the performance of that loan with at least 2 credit bureaus. It's required to actually report it to all, but we find some banks have either a partnership with one, they're closer to the other one. So at least put it in 2. So Ope takes a loan from Bank A or Lender A. Bank A or Lender A needs to report the details of that loan to the credit bureau. Now, whether the loan performs or doesn't perform also needs to be reported. Because that data is now there, every lender is required. Again, we'll go back to whether everyone is doing it from a separate discussion. Every lender is required to then check against the credit bureau before giving out a loan to by the next time it shows up. If you did that, it really means that you cannot have people borrow from Peter to pay Paul. It's just technically impossible, except where Paul is very happy to collect the loan from Peter. So putting it in that way, it just means record all loans against the credit bureau, check all loans, check all individuals against credit bureau data before giving them a loan.
All right. Thank you so much for that. Please, if you have more questions for our guest speaker, please drop it in the comment section. Thank you so much, Mr. Ope Adeoye. I will just pick some of the questions again in the Q&A section, and there we can go. By way of contribution, the EFCC would not investigate loan recovery if fraud is not established. This is irrespective of the amount involved. Okay, thank you so much for your contribution, Ismail. If a man spends on a woman pretending to love him in particular, gives her money she claims she was for a different purpose, is that also fraud? If so, is that binding with the law? Does she have to pay back? It needs to go between issues between a man and a woman, according to the general say. But if I give you money for a purpose and then there is a binding agreement that you will repay me, whether it is written or it is spoken, but you said, I will give you back the money, the lady can be held liable for it if the man is able to prove that she said so. Because she said, he said, there's really no proof. But with the advancement of technology, when you're even making those conversations, you can pretty much just record yourself where the woman is saying, oh, I'll give you the money back. If you're able to prove that, yes, that money was for ABC, but she decided to use it for BC, that's fraud. And then it is binding as long as an agreement was reached. You will pay me back my money, XYZ. It's an agreement, spoken or written, it's agreement. And yes, she has to pay the money back. You took a loan from someone, you have to pay back. Whether it was your lover or not your lover, as long as you agree that you were going to pay back, you have to pay back. Is there anything being done to make credit checks with credit bureau in real time to combat serial fraudsters trying different organization? Now, the thing is that all credit bureau can do is call and encourage lenders to pretty much submit data. Most of the times where you're not able to get real-time data doesn't always necessarily mean the credit bureau did not update the system. Some of these lenders have not gone back to submit updated data that shows that the borrowers are no longer owing. In that instance, I mean, they're not magicians. They can't know what has happened in the lending organizations. What they do is that they do call lenders. They have account officers that are calling lenders on all the time. Oh, you've not submitted your data, come and submit your data. They have all of those things in place, and that's how they manage it. Can we get this recording after the meeting? Yes, we can get this recording after the meeting. So we've gone through all our questions, and like I promised, this particular session was going to be short, interesting, and we would just be able to achieve everything before the due time. Please, we will be taking one more question from our guest speaker before we proceed. Okay, I have just one more question for you. Okay, what role do regulatory framework and compliance measures play in safeguarding lending institutions against fraudulent activities?
Would that be for me?
Are you with me?
Okay.
Yes, please. Yes, please.
Yeah. So, for example, if everyone was truly complying with the regulations and the framework that have been put up for lenders, because of those tools that are in place, it gives you the opportunity to then be able to properly investigate any cases of fraud as you find them. So, for example, if you have fully complied with the requirements to register all loans on CRMS or on the credit bureau, you can demonstrate that you have complied with all of the extant regulations of the law when you then approach enforcement agencies to say, I need your help to maybe investigate something, etc. So I think those are one of the ways that I think that the regulations and framework already help you. But like they say with all regulations, they basically tell us what to do, but we will not be able to get help out of enforcement authorities if we have not demonstrated by ourselves that we have also done what we're told to do and complied with the framework.
Absolutely. Thank you so much. And thank you for coming for the session. I really enjoyed the questions and then the feedback provided from everyone. I hope everyone was able to learn one or two things. So I'll take the questions again in the Q&A session. I still have a couple of questions I haven't been attended to. If Lendsqr is Lendsqr able to guarantee that as a lender on the platform, no fraud would happen to me by bad borrowers? We're able to guarantee to an extent if you're going to follow the instructions. So we have simple checks and simple criteria. So we are saying you want to give out a loan, do ABC, do XYZ. However, there are instances where most lenders will rather go their own route. What we can do is advise you on the security measures, the decision model algorithm to use, and all the information to use inside when you're looking out for each borrower. For different category, it goes beyond just giving out loans to mediums to the 5k 2k loans. So you're looking at giving out loans to the higher people, working class, salary earners, and all of those people that fall into this bracket. We have all of those algorithms. We have all the advice. The question is, will you as a lender take this advice and implement it? If yes, then yes, you would have less NPL on the Lendsqr platform. How can someone prove their innocence if the lender claim they have done fraud? Because we have seen how Ope and Pampe have been going about damaging people's reputation. Trying to understand what you mean by how can someone prove their innocence if a lender claim they've done fraud. If you've taken a loan from somebody and not repaid, you've done fraud. So if it's in that aspect, but if you're talking about where people's stolen identity are being used for OPay account, then that's different. You just have to provide, there are instances where you have to provide some kind of police reports so that they can, or a court order to prove that yes, you are innocent. Take it from here. If my BVN, I kind of give my BVN to my sibling, or someone somewhere gets my BVN, then goes to use the information to take a loan from somewhere and provides all the information relating to my BVN up to my, maybe if the company asks what is your mother's maiden name, or if the company has given me a valid means of ID, they ask for a photograph, you provide. They ask for a bank statement, they provide it. It's usually very difficult for the lender to be able to tell that, oh, it is not Grace, except when they are doing the lending business physically. That's when you'll be able to tell. But in an instance where some of this information are falsified and submitted, you literally will need a court order or a police report to prove that you are innocent. Yes, I've been able to answer that. So furthermore, for information on how to go about this, you're looking for how Lendsqr can help your lending business to spot and block and prevent fraudulent borrowers. You can always talk to us. You can send us an email. We are going to share this slide with everybody that have attended the session. If you want more information, we're also going to send a recording of the session as well so that you can just watch it as well. So all you have to do is send an email to sales@lendsqr.com. We are always here to help and discuss with you. If there are no other questions, this is all we have for today. So once again, Mr. Ope Adeoye, thank you so much for coming. And like I promised, it's going to be a short and interesting session, which I have delivered. Thank you so much, everybody. Enjoy the rest of your day.